Welcome back to part 2 of the solution to BCIT homework problem 1F. Okay, so we are now preparing an income statement for Smith Personnel Services. So we have the title, which has the business name first, then the title of the statement. It is an income statement. And then the date. However, in this particular format, we've been asked to prepare it for the period ending September 30th, the month ending September 30th. And with income statements, it is always over a fixed period of time, as opposed to balance sheets where it is at a specific point in time. So this is for the month. For the month ended September 30th. (2012). Okay, so income statement begins always with revenue. And how much revenue do we have? Well, or let's look at what kind of revenue do we have. Well, we have service revenue, and that was 2 jobs that we did. First one was for $7,000, and the second one was quite a bit bigger, $64,000. And that means that we have dollar value $71,000 worth of revenue in the month. Cool. Okay. But we also have some expenses, right? Where we had to spend or use up some assets, spend some cash, whatever it was, in order to generate this service revenue. And the first one we had was rent. So we had to pay for the offices out of which we conduct our work. So rent expense, and that was $6,000. And we had one more expense, and that was advertising expense. And that was $2,000. And if we total these up, and we put down here total expenses, $8,000 lined up nice and neat underneath the revenue. We can then do some math, do a little bit of subtraction, and realize that we end up with a net income equal to $63,000. And so that is the income statement for Smith Personnel Services. This shows how much income was earned over the month of September 2012. Now, we also have to create a statement of owner's equity. So again, we're going to start the statement with the title of the business, Smith Personnel Services. And this is now a statement of owner's equity, and it's for the same time frame as the income statement. So for the month ended September 30th, 2012. Okay, and so now we begin with the opening balance, or the beginning balance of J. Smith, capital. And this is as of September 1st, 2012. And the beginning balance in the capital account was $106,000. And to that figure, we're going to add anything that increased that, right? So we had an investment by owner of $120,000, right? So if we scroll back up, we can find that right here, transaction A, plunked in some cash, but look, J. Smith Capital went up by $120,000, and that's where that is coming from. What else would have caused the owner's equity go up? Well, we just did an income statement, right, which showed that we had a net income of $63,000, and that also is added to the capital account. So we have to write in here that we've got a net income for the period, for the month, of $63,000. And so those can total up to $183,000. But that's not the only transaction that affected owner's equity. Later on, transaction I, John Smith withdrew $32,000, which will have decreased the owner's equity. And so we have to record that as well. And so we're going to say less owner withdrawals. That's a W in there. All right, so less owner withdrawals, 32,000, and I'm going to denote the decrease, the negative amount, by putting brackets around it. And now we can add up that column to get J. Smith Capital, September 30th, 2012. And if we do the math, look at that. $257,000. And does that amount jive with our ending balance here? Oh, look, yes, it does. Right on. So we know we've got we've done it properly when those two things link together, right? Okay, and the last requirement we have to do is prepare the balance sheet for Smith Personnel Services as at, so at the particular point in time, as at September 30th, 2010. And so the balance sheet is going to have the assets and liabilities. So we've already dealt assets, liabilities, and owner's equity. And so you'll see we're going to take all these balances, the ending balances in our Part 1 worksheet, and use them to create the balance sheet for this company. So Smith Personnel Services balance sheet as at September 30th, 2012. Okay. And with balance sheets, we always begin with assets. So, assets. And we're told to, I think, do it in... Yeah, okay. So, assets, the first asset always listed on a balance sheet is cash. And that, in this case, if we scroll all the way back to the ending total, which I'm not going to do to save time here, we would see that we have an ending balance in cash of $76,000. And accounts receivable, and these being financial statements, we would never abbreviate on financial statements. So it's okay to use A/R everywhere else except on the actual financial statement, where we have to write it out. So accounts receivable, $86,000. Supplies, $7,000. And furniture and computers, $96,000. And that's it for the assets. We add all these together and we get $265,000, and we use the heading total assets. Okay, now we have liabilities. And the only liability we have is accounts payable. And it was $8,000. And then we have the final section, owner's equity. And from the statement of owner's equity, this was J. Smith Capital, also from our worksheet in part 1, $257,000. So if we want to get then total liabilities and owner's equity, we would total these guys up and we would get $265,000, and magically that keeps our accounting equation in balance because we have total assets, 265, equals liabilities plus owner's equity, 265. And that concludes this problem.